Hello guys, welcome back with me. Don't forget to like, share, and don't forget to subscribe. How keys Fed comments and Bitcoin derivatives data point to further BTC downside. BTC and stocks sold off after comments from the Federal Reserve re-emphasized the Fed's commitment to lowering high inflation in the United States. A $750 pump on August 26 took Bitcoin or BTC from $21.120 to $20.870 in less than 2 hours. However, the movement was completely erased after comments from U.S. Federal Reserve Chair Jerome Powell reiterated the bank's commitment to contain inflation by tightening the economy. Following Powell's speech, BTC price dropped as low as $20.700. At Jackson Hole, Powell specifically mentioned that the historical record cautioned strongly against prematurely loosening policy. Right after those remarks, the U.S. stock market index reacted negatively, with the S&P 500 dropping 2.2% within the hour. On the Bitcoin chart, the affable bird candle, a reference to the shape of Bart Simpson's head, a descriptor of BTC's up and down price action, surfaced. Outside of the unpredictable technical analysis indicators, there are other indicators that pointed to Bitcoin broader neutral to bearish sentiment. Regulators up the face on crypto legislation. News for cryptocurrencies has been negative for quite some time, and this is also weighing on investor sentiment. On August 24, the U.S. Federal Deposit Insurance Corporation issued cease and desist letters to 5 companies for allegedly making false representation about deposit insurance related to cryptocurrencies, including FTX US. On August 25, India-based crypto exchange CoinSwitch had its premise searched by anti-money laundering agents over alleged violation of forex law. Launched in India 2020, CoinSwitch successfully raised capital from Coinbase, Ventures, Andreessen Horowitz, Sequoia, and Tiger Global. Lastly, on August 26, the U.S. Securities and Exchange Commission postponed a decision for a Bitcoin spot exchange traded fund by global investment firm FANEC. Even though the approval odds were remote, it reinforced the anti-crypto sentiment from the regulator. Consequently, crypto investors are faced with lingering uncertainty despite the seemingly helpful inflationary scenario, which should favor supply-capped assets. For this reason, analyzing crypto derivatives is essential to understanding whether investors have been pricing higher odds of a downturn. Pro traders were neutral to bearish ahead of the dump. Retail traders usually avoid quarterly futures due to their price difference from spot market. Still, they are professional traders prefer Fed instruments because they prevent the perpetual fluctuation of funding rates that often occurs in a contract. In healthy markets, the indicators should trade at 4% to 8% annualized premium to cover costs and associated risk. Yet, that has not been the case because the Bitcoin futures premium remained below 1.8% the entire time. This data reflects professional traders' unwillingness to add leverage long or bull position. Maybe just that from me. Thank you for listening. Don't forget to subscribe. Thank you. Goodbye.